But I guess before we really dig into today's conversation, just a few housekeeping things for you to be aware of. First of all, this is all entertainment. None of this is investment advice. So please do your own due diligence, do your own research, and take care of yourself first, right? Secondly, it would really help us if you end up, if you like or subscribe on our YouTube or Facebook pages. So please help us do that. And lastly, this is meant to be a conversation between us, like everyone here, right? So please do leave comments or questions on YouTube or on Facebook. We will be able to see it here, and we will definitely be able to put it up and have a conversation with you about that. All right. With all that said, welcome to the show, Reuben.
Thanks, guys. Very excited to be speaking to you all.
Yeah. So before we really dig into the crypto side of things, why don't you tell us a bit more about your background? Like where did you come from, and what are you up to today?
Sure. So I was born and brought up in India. I was born in this town called Goa, which is a state actually in the southern west coast of India. Did all my education, schooling there, got a degree in economics, started off my career in Bain. And I think over the last couple of years, maybe like the last 7 years, have just been sort of like hustling around Asia, working across consulting and startups. I started my first company back in 2016, I think, in the co-living space. Did that for about 2.5 years. Moved to Singapore with this company called Zilingo, which is a fashion e-commerce company. And yeah, I think over the last 7 years, just been working in startups, mainly in the 0 to 1 phase. I love building teams, love building new businesses. And along the way, sort of also, stumbled across the world of crypto and have been exploring and trying to get smarter on that space. So that's a little bit about myself.
Nice. Actually, for those who don't know, what exactly is the whole concept of 0 to 1?
Yeah, that's a good question. So 0 to 1, I think the way I describe it is everybody has a bunch of ideas, right? And especially in the startup ecosystem, there are tons of ideas, and it doesn't even totally apply to like new startups, but even at larger companies, everybody has new ideas and they want to take it from an idea to real life. And I think that's a phase where I enjoy the most, wherein taking and putting together things in a very, very scrappy way. So in a way, for example, even what you guys are doing today with the Daily Show, right? I'm sure you guys discussed and brainstormed and be like, yeah, this would be cool. But from getting there, and everybody has ideas, but getting from there to actually making reality and iterating and improving it, like today you guys added the intro role and building that to eventually becoming really big. Sort of that first phase is sort of, I think is something which I enjoy the most. And in my experience, I've seen a lot of people get really like intimidated, like, oh my God, what if this doesn't work? What if that doesn't work? But for me, I've just absolutely enjoyed it. So I've tried to sort of my hand starting my own company. When I was at other companies, help them build new businesses. And really taking like ideas and bringing them to life is what I would classify as the 0 to 1 phase.
Okay, so thank you, Reuben, for coming. So Reuben is very much involved in the crypto space, and if you realize, you can take a look. I think I'm pointing it correctly. Topics today, we're going to talk about the crypto crash. We'll talk about Dogecoin. That's the hottest topic nowadays. We're also going to go into some useful and practical applications of crypto, and what exactly crypto is all about, right? Because among the hype, if you look beyond the hype, like, is there something practical and useful about it, or is it just full of fluff? So we want to dig into that. So Reuben, my first question for you for today is because crypto is crashing right now today, and it's still crashing right now as we are talking. So it's a sea of red. And we could talk about today's crash. We could talk about the crash 3 days ago from the Elon Musk tweet, or maybe last week, or even like there's so many crashes. And it's so volatile. So, yeah. Reuben, what's your take on crypto? And tell us a bit more about how you feel about today's crash and how different is it from previous crashes and what we should look out for.
Yeah. So, guys, to be honest, I think when people look at crashes in the crypto world, they probably would compare it to, say real estate prices, or they would compare it to, stock prices, things like that. In my opinion, that's not really an apple-to-apple comparison. Crypto markets are really, really volatile because at the core of it, it's a price discovery. Like, what is the value of Bitcoin, right? Nobody really knows. And it could be, the market believed that it was, $3,000 maybe at the end of 2017 or the early 2018, and maybe the market now feels it's maybe $50,000, $60,000. The fact is that nobody really knows what the value of Bitcoin is, but clearly there is value. I was just looking at sort of the Bitcoin price 1 year ago, which is May 2020. and it was $9,000. So arguably, yes, crypto markets are highly volatile, but I think when you take a really, really big step back and zoom out, it's like it's only gone up, which only goes to mean that there is value in cryptocurrency, there is value in this entire system. And like it is volatile. I think there's no two ways about it. But I think the volatility comes not from there being doubts if this works, but the volatility comes from the inability for the market to actually put a value on this. Because like how do you sort of, with a stock and a company, it's very easy to say, okay, price per, like these are your earnings, these are your cash flows, boom, 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 you get to a number. There is some amount of speculation, but it's pretty accurate. But when it comes to something like Bitcoin, right, like there are so many use cases of it. Some people compare it to the market cap of gold, which is $11 trillion. Think about yourselves. If I gave you an option, hey, Andrew, if you were to, store your wealth, would you go buy some gold bars? Or maybe, would you buy some Bitcoin? I don't know. But I would argue that maybe 10 years ago, you would say, I would just buy gold. Today, you might say, I might buy 10% gold, or I might buy 90% gold. So I think the question with the entire prices and the crypto world is it's very hard to attribute what the use case and the utility is. It is, it is absolutely clear that there is use case, but how valuable is it? I think is unclear, and which is what sort of reflects in the volatility of markets. But again, for me, I'm not too worried or bothered about it. If you take a big step back, again, like I said, you look at 1 year ago where we were, 1/3 the price of what it is today. So from at a larger scale, I'm not too perturbed by it, but yeah, crypto markets are highly volatile. You need a stomach to deal with this. I tell a lot of my friends, put off your notifications. Don't get notifications saying Bitcoin is up, Bitcoin is down. It just drain your battery. So as long as you're sort of keeping away from that and sort of understanding what is happening, like at the technology level, it's quite exciting.
So turn off your app notifications right now and just follow this live stream, right? So you say, yeah, not too worried. So you seem pretty chill, which leads to me believing that you would think that the price will go up. But I think like with every crash, people are reminded of the 2017 huge crash in 2017 when Bitcoin value dropped by about 70%. I mean, we just don't know when is that crash coming, right?
Yeah.
So what makes this time different?
That's a great point. And again, I can't tell you that it won't go back to 3,000. I don't know, to be honest. But I think a couple of things have changed significantly since 2017, and I can sort of name a few. I got into Bitcoin, or I started learning about cryptocurrency in 2017. And, I got into all the wrong reasons. I got it because everybody's making money. I thought I'd make a quick buck. And through that crash, I lost some money. But what I didn't lose were the learnings and what I sort of had learned about the cryptocurrency world. And I think that has sort of continued with people who got into that space. So I feel the general education of the public towards blockchain and cryptocurrency has sort of taken a step function up as compared to 2017. So in general, more people are aware about the industry, how it works, and so on and so forth. The second thing is just, user experience. If you go back to 2017 and look at, the wallets, look at the exchanges, they were very hard to use. People were just, put away by it. But there's been a lot of changes which is happening, in terms of wallets, in terms of just buying and selling cryptocurrency, a lot of education around cryptocurrency. And that has sort of been a big step function change. So people are much more aware about what they're doing and asking questions, and products are getting better. And the third thing, which I feel which is very different from maybe 2017, is that this cycle around, a lot of institutions have sort of started paying attention to cryptocurrency. The biggest being, we've all read the news about Tesla buying $1 billion of Bitcoin, and MicroStrategy announcing all of that. So I think, and these are just few, PayPal, Square, Twitter, all of these guys are talking about, putting some amount of Bitcoin on their treasuries. And this did not happen in 2017. And for an institution who's, publicly listed and publicly traded to go and say this, they must have done a lot of homework, must have done a lot of diligence before making this claim and actually acting on it. And this, again, did not happen in 2017. So while, of course, like this crash may, remind you of, oh my God, Bitcoin went to 18,000, went down to 3,000. Yes, the price could still happen, but from a structural change, a lot has, we've taken a big step function change as compared to where we were in 2017, just in terms of awareness, in terms of acceptance, in terms of usage. And this is just external. If you go down to the cryptocurrency world and you see what all projects are happening, you see what's happening at a technology level, it's so much more than 2017.
I mean, one of the reasons that's causing fear, or they call it FUD, right? Fear, uncertainty, and doubt, is that, well, you mentioned it earlier, it's very hard to give it a price and there's some hype around the prices. So, I mean,
Yeah.
with a company you mentioned, we have PE ratio, we can look at the earnings, we can look at sales. There's so many ratios to look at, we have cash flow. But for crypto, how do you value a cryptocurrency?
Yeah, that's a hard question. To be honest, I don't know myself. But here are the things I would sort of think about. Number one, think about the use case it is solving. So with Bitcoin, one big argument, and there are like multiple arguments. Every sort of cryptocurrency, I would say, has a different and a unique use case, and you can think about it differently. So let me give you two examples. Let me start with Bitcoin. Right, there's a big argument about Bitcoin being a store of value. That means if I need to store value in in an asset which is safe from inflation, I should sort of put it into either Bitcoin. I would put it in gold, and let's keep them as two comparisons. Now, one argument is, okay, there is X amount of gold in the world, and the market cap of gold, I think, is about $11 trillion. Now, if Bitcoin replaces gold as a store of value, and why it would do that? It's just a technologically better format of store of value. Think about it. We probably discovered gold like 100 years ago, and we still are going crazy about it. It's a rock at the end of the day. But anyway, keeping that aside, assuming for sake of an argument that Bitcoin replaces gold as a store of value. Now, there are $11 trillion in gold. So that's the quantum of what the market cap of Bitcoin could be, which is, I think, maybe today about $1 trillion. There will only be 21 million Bitcoins out there, which is, you can verify it on the white paper, on the code. So then you sort of do the division, and you probably come down to a ridiculously high number, which is, I don't know, 10 times that number what it is today, just by simple math. And that's sort of one way to arrive at a price. Now, do we believe Bitcoin will replace gold 100%? I don't know. What happens if Bitcoin takes 10% of gold's market cap? Then this is what the price would look like. What happens if it takes 15%? This is what the price would look like. And that's sort of how people, I think, are arriving at it. And that's maybe like a Bitcoin use case. Another use case could be, whatever. There's a big debate about Bitcoin and Bitcoin Cash and things like that. But leaving all of that aside, Bitcoin essentially is a payment system, right? I can send you money, Andrew. You can send me Bitcoin. Now, the payment system we use today are things like Visa, like MasterCard, TransferWise. Now, assuming that we don't have to use Visa's network anymore, assuming we don't have to use MasterCard's network anymore, assuming we don't have to use the SWIFT network anymore. If Bitcoin becomes that, then that's the value of Bitcoin. Then you divide by the number of coins, and you get a value to it. So that's, I think, how people think about the putting a price on the coin. And it all comes down to your belief on, do we actually believe that the Bitcoin network can maybe replace the Visa network? I don't know. I think Visa is smart enough and is already working with cryptocurrency companies, but that's, I think, how the price discovery method goes.
Actually, I'm curious, Chong, how do you relate to Bitcoin or crypto?
Yeah, I think I'm in this. Well, actually, but I'm going to defer that question for a bit, right? Because I do have a follow-up to your comment about the Visa network, right? So with Visa, with MasterCard and all that, those companies, they charge a transaction fee for their services, right? And that's kind of built in, and it's kind of accepted. Yes. With Bitcoin, though, if let's say it becomes that thing where it replaces the Visa or the MasterCard, there is no transaction fee technically on it, right?
There is. So when I send you some amount of Bitcoin, I do pay a transaction fee for the network. And this essentially goes to the validators and the miners to validate that the transaction actually happened. Yeah. So I think this is another big misconception that when you send money via Bitcoin, it's free. It's not free. It's cheaper. So cross-border payments are cheaper, but it's not free at all.
Yeah, but I guess the way I look at that is, yes, there's a bit of Satoshis going across to the miners and validators, but that doesn't really impact my Bitcoin that I hold. You know what I mean? It's just because with the Visa, with the MasterCard, you're getting, let's say, US dollars for it. And you're with Visa, MasterCard, they're publicly traded companies. So technically a very, very, very small percentage of that goes into your, into your bottom line per se, right? But in this case, there is no bottom line, right? There is nothing that's coming to me to say, okay, this is, if we were to actually replace the SWIFT network, this is the value of Bitcoin. You know what I mean? So how do that's kind of how I see it right now. So what do you think about that?
Yeah, that's a tricky one to sort of get your head across, because I think an interesting way, and again, I don't know if this answers your question, but like a way to think about a Bitcoin is sort of multi-layered, right? Some people might think of, and not even Bitcoin, like any cryptocurrency. Some of the people might think of it like a stock. It represents value in a larger company or in a network. And that would sort of be the equivalent to what a Visa stock would look like. So the Visa network is doing well, the Visa stock price goes up, but inherently they're not really linked. The Visa stock price is linked to the Visa bottom line. The Visa bottom line is linked to how the Visa network runs. The Visa network doesn't really need Visa stock to operate the network. But that's sort of slightly different in how the cryptocurrency world works, wherein I think the coin is not only a share in the network, but is also what powers the network. So, a better example of this is, say, for example, Ethereum, right? If I have a contract, which is a smart contract, and I need to execute that contract, it requires me to pay some amount of ETH or gas to that contract. So the reason I own those Ethereum, if theoretically, is a utility. I can't operate on the Ethereum network if I don't pay that ETH. So ETH is not like, it's purely a share of the Ethereum network. So I don't know if that answer that question exactly, but the way essentially the network is built, or the way sort of the incentive structures are built, so that the Bitcoin, that token, the coin essentially is, and the incentive mechanism. So if I want to send money to you, I pay a transaction fee, and that fee goes to the miner or the validator who's validating that transaction, and then he has that. And when the price goes up, maybe he can sell it, or if he wants to transfer money, he sends it to someone else and he pays it with Bitcoin. You're essentially moving to a world wherein everything gets denominated in Bitcoin. And like the currency and the asset is one and the same thing. So today, for example, the Visa share is an asset, but it's denominated in USD, and that's the currency. But in the crypto world, the Bitcoin would be the asset and the currency. I don't know if that sort of explains it, but I know it's a bit hard. I try to get my head across it sometimes. But yeah, that's probably how is a better way to think about the value of the network and just the asset itself.
Okay, yeah. So I guess if I were to try to summarize what you were saying there, the idea here is, in order for you to actually transfer Bitcoin, you actually need to own a bit of Bitcoin to actually make that transaction, right?
Yes.
And because you need to make that, you need to own a bit of Bitcoin, you technically need to own a bit of Bitcoin. So from that perspective, demand is created.
Yes,
right?
correct.
And I guess the way if you were to look at it is, let's say if you were to, if you're trying to create the transaction and you're looking for Bitcoin to make that transaction, I'm the one holding it.
Yes.
Then you will need to, you essentially need to buy it from me. Therefore, technically the value of my Bitcoin might go up a bit overall.
Correct.
Right.
Correct.
Okay.
I think at the end of the day, we're coming down to assuming it's mainly used as, say, the payment system, right? And there's a big debate if Bitcoin network is good for payments or it's good for store of value, because transaction fees on Bitcoin on the network is high. But basically what we're trying to come down, the price of Bitcoin would be, what is the value of this network? What is the value of this network which allows us to store value, which is inflation proof? Or what is the value of this network which allows us to do these payments across anywhere in the world? Divided by 21 billion, which is the number of Bitcoin, that's the price of Bitcoin. It's as simple as that. But what is the value of the network? Nobody knows.
Awesome. Yes. Awesome. And I just want to make sure I correct you there in case we have some new people who are watching. It is not 21 billion Bitcoins, but 21 million.
21 billion.
Right?
Yes.
Okay.
Sorry. By the way, please fact, dude, a lot of I use a lot of, I remember I had a conversation with Reggie earlier, and I lose some data very loosely. So yeah, don't please just fact check anything if you're not 100% sure.
It's okay. We'll just cut out this video and use it against you one day. What stays? If it's on the internet, it stays there, right?
Oh.
All good. All good. Yeah. So Andrew, going back to your question, there was a point in time where I spent a bit I was definitely really trying to understand the concept of Bitcoin and Ethereum. Wow, I can't say this word today. Ethereum. Yeah. So there was a point in time where I was definitely spending a bit more time looking at that. And the way I kind of, or my conclusion at that point is, it's still really early on. I don't really know, and I don't really have the interest in digging into it at that point, right? But at the same time, if some of these theses have, once again, like what Reuben was saying, you have to assign some sort of probability to it, right? So by assigning some probability to these these potential cases, then you kind of have an expected value, right, from a mathematical term of what Bitcoin can be worth. And for me at that point, it was like it makes sense for me to have at least a small portion of my net worth in it, right? So yeah, I mean, disclaimer here, I do own some Bitcoin, and I think it's been sitting there for a few years already. So I've seen it go up and down, but continue to hold strong there.
It's mostly up if you take it from the point of time that you bought at a time a few years ago.
Yeah, well, I mean, but you also see your 30% drops, 50% drops, 80% drops, right? And
exactly.
like any other company, like you definitely feel it, the emotional rush of something like that.
Chang was like, I'm buying a Lamborghini, but now like, oh damn, now I can't.
Yeah.
Oh, but Chong, when you said you were researching and it was still early on, which year was that? Do you still remember roughly?
This was like 2016, 2017. So I think it was like right before like I would say the first initial big hype happened. And yeah, that was when I spent a bit more time trying to better understand that whole space. So yeah, no, I'm not one of those people that held it like back in 2013, 2014 or anything like that.
Right. So now we're in 2021. So do you still find it early, or Reuben, do you think we are still early?
I think, yeah, absolutely. I think the very fact that I still, have conversations with people and they're like, hey, Reuben, what's Bitcoin? Or should I buy Bitcoin? And I think the point is not, should you buy or should you not buy Bitcoin? The point is like, this is clearly like Bitcoin's market cap is $1 trillion. Like there's $1 trillion the world money's in Bitcoin. And that's only one. If you put all the cryptocurrencies together, it's $2 trillion. So I would still say it's early, right? I think the fact that it's so hard to understand makes it, not common knowledge. But again, like I think like from a investment point of view, if you only look at that, yeah, it's Bitcoin was probably at 2013 would be $10-15. It's I don't know 10,000 times higher. But yeah, if you had asked me a question, I would still say it's still very early days on what is possible. Yeah, I think like I said, if the eventual vision and the promise, or not the promise, but the possibility of Bitcoin sort of becoming a new store of value, which is sort of replacing gold, or sort of a new payment system, or for example, a new operating system for the internet, which is like sort of what Ethereum is building, then the possibilities are still very, very large. And with that lens, I think it's still very early.
Right. So I think this is also a good time to remind our audience to share this video if you're watching it on Facebook, or to subscribe to our YouTube channel. We're going in depth into the whole crypto space. We're talking about the timeline. We talk about 2017, and now we're talking about the present, right? So, the past 2 years have been wildly different. We're also doing this TFC Daily because of our current phase of some call it circuit breaker, some call it phase 2, but I prefer to call it heightened alerts. So we're all at home. That's why we're doing this daily show, right? And today's topic is about crypto. So in the context of 2020, 2021, we have COVID, we have a new US president. Like, what do you think of cryptocurrency in this context, 2020, 2021?
Yeah, that's a great question, because I feel specifically in 2020 and the pandemic, and what is happening in some of the crypto markets today is not completely unlinked. So if you take a step back, COVID sort of started becoming a real deal, I think back March, February, roughly of 2020. And then, all of us, many of us, unfortunately would have seen this firsthand. Businesses were shutting down, people were losing jobs. All of this was happening, the economies were shutting down. But at the same time, some other interesting stuff was also happening, wherein stock markets were doing really, really good. Stock markets are going all-time highs, and like I think that the term I've heard people use was like a K-shaped recovery, wherein financial markets were doing well, but like the real economy seemed to be struggling. At the same time, governments across the world, and this is common knowledge, have been printing trillions of dollars. I think, again, please fact check me on this, but I think the term is about 40% of all, or I think 30% of all US dollars in circulation have been printed in the last 1 year, and this is through the multiple stimulus checks the government has done. So through all of this, what has happened are two things. Number one, there's been an immense amount of cash which has been flooded into the economy, and that's of course going to lead to things like inflation and so on and so forth. But what also sort of large, and I think this is what triggered large institutions to start paying attention to crypto is, if it's that easy to print money, anything which is not limited in supply essentially does not, for something to have immense value, it has to be scarce. If there's too much of it, it's not going to be, valuable. And especially people can't predict it, the maximum supply of it. And what has happened with sort of, currencies, and mainly sort of the US dollar, which has been the global currency, is that suddenly there's been a lot of, it's been printed out of thin air, which is why, some of it landed up in financial markets. Maybe some of it actually landed up in Bitcoin with Robinhood. A lot of the stimulus checks have, that's sometimes some people say that that's why Bitcoin is going up. Assuming there are, I don't know, maybe like 16 million or 160, say 100 million people in the US, and they all, bought $100 of Bitcoin. Well, that's like, you do the math, that's, what the market cap is going to go up by. But the point is that, through this pandemic and through this weird sort of recovery, what's been happening and how we see financial markets sort of being decoupled what's happening with, real markets, the question has come on, how are we denominating all of this? Like, on what base is the financial markets going up? Measured against the US dollar, yes, it's going up. But then, when you say, okay, maybe the value of the US dollar is going down. That's why stock markets or companies, which are still pretty much the same as they were in 2009 or as they were in 2019 or 2018, just because the value of the dollar is going down, therefore those markets are going up. And as a hedge against this, large institutions, have been, in my opinion, thinking about, okay, we want to sort of diversify against the US dollar or against fiat currencies. This debate about fiat versus crypto wasn't a debate, in 2019, because there was not that much quantitative easing happening, but it is happening now. So I think particularly in 2020, 2021, given the pandemic, given quantitative easing across the world, crypto has sort of found this new, I would say, relevance, not about superior money and things like that, but sort of a store of value which cannot be just supplies is controlled and limited. And it is prone to inflation, which, to me, in my opinion, in the months to come, we're going to see a lot of inflation given what printing has happened. So yeah, I think to your question, I think given these last 2 years, crypto has a specific use case given what's happening in the macro environment of the world.
So if were to relate it to, Chung, go ahead.
Sorry, yeah. I actually wanted to go back to one of your earlier statements, right, of how companies are kind of looking to put it on the balance sheet. You mentioned earlier that, for example, Tesla, a few months ago, they said, they essentially put, I think, 1.5 billion or so of their US dollars into Bitcoin. And then, I'm obviously going to bring up recent news. Recently, I think Elon Musk was essentially saying that Bitcoin is, I don't know what the exact words are, right? But he was essentially talking down Bitcoin, right? Do you think that, do you have any more information about that, about what actually happened there? And do you have any thoughts or opinions on what he might have said or might have been trying to imply? Yeah,
I think the big debate, and I think recently what the public filings said was that Bitcoin, of course, consumes a ton of energy. So without getting into the details, Bitcoin runs on a system which is called proof of work, which means for you to validate a transaction and for you to host the network and keep it running, you need to essentially do a lot of work. And it basically means computers need to do a lot of work to validate transactions. So if you think of miners, there are these warehouses of computers just running, trying to solve complex problems to keep the network up. And that consumes a ton of energy. People have said that it consumes more energy than some countries, so on and so forth. So that's a big criticism against the Bitcoin network, that it's a guzzler. It just guzzles a lot of energy and it's not environmentally friendly. Now, to be honest, this is personal, my opinion, I think nobody's done their research in depth, because there's, again, not a like-to-like comparison. I've heard people saying that apparently in the US, Christmas lights consume more energy than some countries altogether. And maybe that's true, I don't know. But yeah, there's no two ways about that. The Bitcoin network does consume energy. There are arguments that, and that's sort of what was the biggest criticism, I think, with the recent, Elon Musk and Tesla fiasco, where they said they were not going to accept Bitcoin for payments of Teslas, but they didn't mention anything about keeping it on their balance sheet. And the big argument is, Bitcoin is bad for the environment. Again, my opinion is I think there needs to be done a bit more research. I don't know, to be honest, how much of Bitcoin. I've not done my research, but I think that in my opinion, it's a bit of a stretch of a bit of an exaggeration. Like if we actually measured, like I can tell you, like fashion, which is sort of an industry which I used to work in before at my previous company, is the second most polluting industry on the planet, with all the dyes, with the amount of clothes which go into landfills, so on and so forth. Well, yes, there's a lot of talk about sustainability, but I don't see any of us saying that, hey, we're not going to wear clothes because it's so bad for the environment, right? So I think it is a bit of an exaggeration and a bit glamorized. There's no two ways about that. The Bitcoin network is highly energy, it sucks a lot of energy, but I don't know. Apparently 75% of it is built, it consumes your renewables. So I don't know the facts. So I'm just like, yeah, it may be, but yeah. I think it's an exaggeration.
Yeah, you definitely have to draw the line somewhere of like, okay, like this is this is to the extent I'm going to actually dig into that, right?
Yeah.
And then I think for anything that we do in life, you go on Netflix, you watch some documentary, be like, you just feel bad about it. So
correct.
So yeah. you do have to pick your battles there.
Yeah, you have to. And I think like for example, Ethereum, and they talk a lot about proof of stake and things like that. I think it's pros and cons. I'm sure if we sat down and did the actual carbon footprint of the New York Stock Exchange and Visa, and maybe how much money goes into digging out gold, that would sort of be a comparison. But I'm sure there's somebody doing that research.
Well, I think it depends on what you compare to. If you compare Bitcoin to other forms of cryptocurrency, then maybe it's using more energy. But if you compare it to the whole banking and financial system, including all the ATMs and all the banks that are open, all the employees, I mean, it's not an apple-to-apple comparison. But many things in this world use electricity and energy, right? So there you go.
Yeah, absolutely.
But just to
No, sorry. I was just saying, like compared to other cryptocurrencies, 100%. Bitcoin consumes, I think, the lion's share, and so that's a big criticism towards Ethereum. And now they're moving to proof of stake, which is less energy intensive. But yeah, like you said, like everybody consumes electricity. Like I would say, for people on either side, just understand the facts, do the research, and then sort of stand on one side. I'm right in the middle right now.
So Elon Musk did clarify that Tesla hasn't sold its remaining Bitcoin stake. So if you follow the whole process, they bought Bitcoin, they sold 10% because from the filings, you could tell that they sold 10% back then. And then after Elon Musk made his tweet, he clarified that Tesla hasn't sold any of its Bitcoin stake. Still in Bitcoin and its future, but they just want to be more energy efficient. So that's kind of whole story. And I think this is a good place to bring in Dogecoin, since we're talking about Elon Musk, Tesla, and we're talking about use cases. So Reuben, is there a use case for Dogecoin?
So like, I think Dogecoin is super interesting. So a couple of things. Dogecoin, like I think the inception of Dogecoin was a meme, right? It was a joke. And if you look at the world of crypto, it runs with a lot of memes. Completely side story. I think memes have proven in the last maybe 1 or 2 years that they're super powerful, because I think the ability of a meme to communicate not complex, but a lot of information in one picture is very powerful. And it's easier than sort of writing 10 lines. You can communicate like 10 lines in a meme. So memes are very powerful, and sort of it's a big thing in the world of crypto. But leaving aside Dogecoin, if it's valuable, it's supposed to be a better format of payments, lower transaction fees, But I think what's worth taking away from this entire Dogecoin episode is that it's now risen to, I think, the 4th or the 5th, maybe 6th, one of the top 10 market capitalized Dogecoins cryptocurrencies in the world. And it's mainly driven by like people, I would say, who are less than 25 years old. Now, a couple of facts in terms of Dogecoin. I think there are only a very few number of wallets who hold Dogecoin. So it's quite centralized. Like a lot of Dogecoin is accumulated in a few wallets, and the speculation that these are Elon Musk or whatever. I don't know. But it's not very, it's not very distributed. That's one sort of criticism on the back end for Dogecoin. But what's been crazy is to, like, I don't know if you guys are on TikTok. I spend very little time on TikTok, but to see how crazy, like, these, like, I sound like such an old man, but like, I won't call them kids, but like teenagers, and how they like are talking about Bitcoin and talking about crypto, and sort of Dogecoin has become this thing that they all rally around. And I feel that's super important as a macro trend, because I think it's the same trend which sort of happened in the GameStop situation, wherein a bunch of people who were, like not, you won't call them like, bankers on Wall Street, sort of found a way to congregate, aggregate behind a certain, goal or a theme, and actually, give. It was almost like the David and Goliath story, wherein they, almost brought down a hedge fund to its knees. So I think with all of this Dogecoin, irrespective of it's valuable or not, I think one thing which is which is absolutely true is that teenagers and millennials are much more smart about finances as compared to when I was maybe 19. I did not even know what a stock was at that point of time, and they're essentially buying and selling cryptocurrency, and they're doing it in mass numbers. And they sort of, I would say, highly coordinated in what they want to achieve. And I think these are very interesting trends. I know in the GameStop there was claims around market manipulation, and this roaring kitty guy on Reddit, he was manipulating the markets. But like there's free markets, right? He can say what he wants to say. People agree with him. They essentially put their money where their mouth is, and something happened. And I think the same thing is with Dogecoin. It just sort of shows that you don't need hedge funds. Markets can be moved with just average retail investors, and it's possible. And nobody sort of would have imagined this maybe 5 years ago, where you said, hey, a bunch of people with Robinhood and TikTok could actually drive. Now again, I do not know if there are hedge funds behind it. There probably are. But if you think about Dogecoin, it's a very sort of like teenager TikTok driven kind of coin. And the only thing I take away from it is the power of that. Is the power of what those platforms and can create, and assuming that these guys were behind Bitcoin, like I don't know, like in 10 years, it's these guys who are going to have money. It's them who are going to sort of be making decisions. So with that lens, I don't know, maybe Dogecoin becomes the currency. Like if you ask a 19-year-old if they really love Dogecoin, 10 years down the line, they're going to be like, hey, I really want Dogecoin. So yeah, I don't know what it is, but what's really awesome is to see what technology, and especially things like Robinhood, things like what crypto have allowed, that I would say in a traditional sense, inexperienced, immature investors are now sort of making waves. So I don't know if you should buy it or not, but just observe what happens with Dogecoin. It's something. It's pointing to an interesting macro trend in the world of personal finance and investing.
Yeah. So
to the moon.
To the moon.
To the moon. That's it.
Am I lagging?
Joe, you want to go ahead?
Yeah. Okay.
No.
Sorry. Yeah, I lagged a bit there. I was going to say that they were making this whole big deal about market manipulation with GameStop, but then you have Elon Musk, saying one thing and then manipulating like this Bitcoin that his company is holding a few $1 billion worth, and then saying another thing and manipulating it the other way. And so it's definitely weird times per se. And just going back to what you were saying about maybe Dogecoin can become something. I think for everyone, like you need to be aware that technically with the US dollar or with any dollar really, it's really just a bunch of people believing it has a certain value, right? There is nothing really behind it. Even with gold, like you're believing that gold has a certain value and therefore it has that value, right? So I mean that was one of the things I kind of spent a bit more time on, back when I was looking at the Bitcoin days of like, yeah, I mean Bitcoin's, yes, it's just a line of code and whatnot, but if enough people believe it should have value, then and enough people are demanding to be paid in that, then there's no they kind of will it to life, right? So maybe Dogecoin does become something because there's a big enough group of people who demand Dogecoin in certain ways or transaction Dogecoin, right? So yeah, it's definitely something really, really interesting to think about.
Correct, 100%. Like I think if that entire generation suddenly decides that you got to pay us in Dogecoin, it's like a lot of what happened with like a lot of NBA and athletes and sportsmen, I think over the last year said that, hey, I want half my salary in Bitcoin. Tomorrow an influencer on TikTok might be like, you know what, you got to pay me in Dogecoin. I'm sorry, the brand will have to go buy Dogecoin and pay that influencer. So I think to your point, 100%, if that cohort, and assuming that cohort of that generation cohort eventually, is where we are, and like maybe in 10, 15, 20 years, it's not a far cry wherein we say that okay that's how things are going to be. It's like how we jokingly say that who uses like letters and email, right? Everything happens on WhatsApp and Slack. Similarly, it might just be that whoever needs to use Bitcoin, we just use Dogecoin. Like I don't know.
Yeah,
right.
yeah.
So, running on Chong's point, like money is a story we tell ourselves, right? If we believe that this $1 note has a certain value, and you believe it, I believe it, many people believe it, and therefore it has value. And I got that idea actually from this book called *Sapiens* by Yuval Noah Harari.
Correct.
Pardon me if I got his name wrong. He's really author, historian, thinker, and so like he's saying that the money is just a story we tell ourselves, and if enough people believe in it, then it has value. So from what I'm understanding from Reuben sharing, Dogecoin use case is more of it's a good entry point into cryptocurrency. It's very useful for reaching out to the masses, especially teenagers on TikTok, because sometimes cryptocurrency can be too high level. Like there's a lot of jargon. It can be quite hard to get into it. So Dogecoin is a good entry point because it's cute, it's a meme, it's a doggy. What can go wrong, right? So that's Dogecoin. But as for practical use case, apart from acting as a currency, because even Elon Musk is asking his Twitter followers, like, will you all allow? What do you think of Tesla accepting payment in Dogecoin, right? And so that's one use case for it.
Yes.
But I understand that there are lots of use cases for many other cryptocurrencies out there. You touched on a little bit. You touched on Bitcoin mainly. But what are some other use cases? And especially, DeFi, decentralized finance, is up and coming. It's the next wave of this whole blockchain, crypto, and that's the next thing, right? So what are some use cases here?
Yeah, absolutely. So I think the ones which we spoke a lot about, which is Bitcoin and say even Dogecoin, they're mainly sort of either store of value in the case of Bitcoin or currency. That means we can send and receive value through one of these cryptocurrencies and networks. But that's sort of not where crypto ends. A good way to really think about cryptocurrency is more of like people have been using this as Internet 3.0 or Web 3. And that sort of encapsulates the world of cryptocurrency. So if you can think of any application out on the internet today, the way essentially it is built in today's world, it's highly centralized. That means there are companies behind each of these applications. So say, for example, Twitter, or say, for example, Facebook, right? There is a company behind that application, and the company controls the application. Now, when you're small, it doesn't really matter. But once you get really large, and we've seen with the cases of Amazon, we've seen with the cases of any of the big tech, right? It creates some kind of questions and I don't know, like problems for society. And I think Web 2.0, which is where the world where majority of us live today, is highly centralized applications on the internet. Web 3.0 is decentralized applications on the internet, which means there is no given owner of that platform or that application. And then essentially, when you look at it from that lens, there are like n number of applications which are possible. You mentioned DeFi, and sort of finance is one big world, assuming that like since all of this is very like money related, of course, finance creates a use case. And there are so many projects out there. A couple of projects, for example, Ethereum, of course, is the most basic one, right? People need to think about Ethereum as an operating system. It's like Android. It's essentially the infrastructure on top of which people can build different kind of apps. So say, in the Web 2.0, there is Android and there's iOS. People are building Robinhood. People are building Instagram. People are building, bunch of different apps, Spotify, Facebook on top of it. Each of them sort of have comparables in the Web 3.0 world. So in specific DeFi, of course, lending is a big use case. Once you have Bitcoin, a big use case of having values, you can collateralize it. You can put it against a collateral and get a loan. So there are platforms, for example, Compound, which allows you to essentially use your cryptocurrency as collateral to get loans, for lack of a better word. There are things around things called automated market makers, which is things like Uniswap and SushiSwap and PancakeSwap, and I don't know. Like last year was a bit crazy, and all of these food things became a thing.
Right.
But basically, what a AMA or a automated market maker is basically a stock exchange which nobody really runs. So Uniswap is a place where I can essentially come and trade. I can give up Bitcoin and I can take like Ethereum, and there's no company behind it. And another a use case around from a finance point of view is providing liquidity. If there is no liquidity in that pool, you can't trade. So if you own some crypto and you own, say, Bitcoin, you own a bunch of tokens, you can go and provide liquidity to these pools so that other people can come and trade, and they pay a small transaction fee and you get a return on that. So broadly, if you think of finance, lending, borrowing, trading are the most obvious applications which are out there. Large projects like Compound, like Uniswap, SushiSwap, a bunch of them are already out there. There are some projects which are, for example, there's a project called DXTF, which I sort of have been helping around with. And what they do is they sort of create portfolios of digital assets. So, I'm sure you guys give this advice too on 101. When you start investing in stock markets, don't start buying stocks on day one, just buy an ETF, right? That's a good way to diversify. That's a good way to reduce your risk. Same applies for the crypto world. When you're entering the crypto world, there are thousands of coins. A good way to start is to buy an ETF, is to buy a tokenized portfolio. And this platform allows, people like you and me to go and build a tokenized portfolio, not only in crypto, but, with any other asset given tokenization. So I think in the broad finance world, essentially it's lending, borrowing, transferring money, trading. You can all see these applications happening in the decentralized world. The only difference being there are much less number of intermediaries. So there are no 20 intermediaries for one transaction to go through. It's usually, peer-to-peer.
You know what they say when you're starting out something crypto related, you're starting out a company and you want to name it. Back then, you have to call it bit something because, Bitcoin. So you call it bit something, or use the letter B. And then later on, it moved to become restaurants because you're talking about pancake swap, sushi swap. And right now, guess what it is?
What is it? I don't know what's the latest.
It's animals.
Oh, is it?
Dogecoin, Shiba Inu,
of course.
or cats are coming up next. Yeah, so it's like there's an evolution in terms of what a trend is. Yeah. But I just want to make sure I understand.
I actually, just to your point on the dogs, I think people mockingly make fun of it and they ridicule it. I actually find it quite interesting because for me, finance, just finance, has been this very complicated thing which is very hard to understand. And even I see this increase in awareness among millennials towards personal finance. And I never had that when I was growing up. Money was something you never spoke about. And I think all of these things, like putting a damn dog on a coin and calling something Uniswap or SushiSwap, right? I think is in a way reduces the barriers of people to sort of get more interested about it. And that way it is good. So yeah, people mockingly be like, oh, this is a joke, but not really. Like you said, Dogecoin is a great way for people to enter the world of cryptocurrency. And there are people, there are 17-year-olds who understand crypto much better than some bankers out in the world. So in that sense, I see the ring to it. It's quite cool.
Okay. I just want to make sure I understand it correctly, and if this might be helpful for those watching. So you spoke a lot about liquidity pool and also about staking, about the swap. So I'm imagining if I'm a retail investor right now, which I am, and I need to buy some crypto, I need to have it on a wallet, and this wallet needs to be connected to an exchange.
Yes.
Right? Like you mentioned Uniswap, SushiSwap. And so on the exchange, what I can do is I can literally act as a bank. That's why they call it decentralized finance, right? Because I can do the lending myself. There's no middleman. I skip out the middleman. I'm lending a specific coin directly to you, and then I get an interest based on that.
Correct. Absolutely. You explained it much better than I did. So exactly how you think about your bank, that you have an account, you can essentially invest that into, like I said, like a token or like an ETF, which has a combination of different coins, or you can lend it out to somebody and get an interest for that, or you can put it into like a fixed deposit, which is what you call staking, and that institution or that organization will sort of go lend it out even further. It's basically what happens in normal banking today. It all sort of has use cases or very similar analogies in the crypto world.
Yeah, actually, since you did mention staking, we did have a question earlier on. So Randolph here is asking, what's your views on staking? So I guess let's actually take it one step back. Let's actually kind of define what staking is, and then if you can share your views on that after.
All right. So shout out to Randolph.
So the easiest way, Randolph, is to think about staking is just like as a fixed deposit. You put money in, and you get an interest for that deposit. Now, a couple of things to think about how fixed deposits work, right? And again, you guys are much better at this than I am, but what happens when you essentially deposit money with a bank is they will take that money and lend it out, and you're as a whatever consumer, you're hoping that they can get that money back. They can get more interest than what they promised you and give you some part of that interest. As long as you can have the same beliefs to the place you're staking with, I think it's a great option. It's essentially adding liquidity to markets. And I think the rates right now are much higher, at least from a developed market point of view. I think developed markets, fixed deposit and term deposits will maybe give you 3-4 at best. Staking, depending on the coin, can vary. But the only things I would sort of be careful for is, number one, do you trust the person who you're staking with to lend it out to the right people? Number one, do you trust them that they can get it back? And do you trust that that institution will not disappear? But basically, in the traditional world, do you trust that there's not going to be a bank run on that platform? So when it comes to staking, personally, I stick to the ones who are larger, well capitalized. I'll stake on, here in Singapore, for example, I'll stake on something like a Gemini, which is pretty large. I might stake on like a crypto.com, very large. I might get like 2x the return on that same coin on some random, exchange out there or some wallet out there. Me personally, I'll probably stay away from it because I don't know if that might exist or not. And that's because I'm sort of low risk. So I think that there's nothing, and people sometimes are like, how are you getting 10% on your asset? Like, how is this possible? The fact is that, in financial markets, that is sort of I don't know how to describe it, but like people are ready to borrow at a certain rate because there are use cases of that. And because it's early days, I feel there is a lot of use cases and more evolving use cases. Markets are not flushed with liquidity. They're not very, very large. So there are very, very large arbitrage opportunities available today. As markets get bigger and bigger, as liquidity enters, arbitrage opportunities will go lesser and lesser. And then over time, I feel staking will, the interest rates or rewards in staking will go lower as it will be. But basically what you're getting rewarded for is helping somebody, capitalize on an arbitrage somewhere out in the market, and they need your capital to do it. And you're getting a small fee for lending out that capital for somebody to make, jump on that arbitrage opportunity. So that's how I would think about why you get such high returns, because there are so many opportunities in the world of DeFi. But over time, they will, of course, reduce. But yeah, just be careful on where you stake. Go with large. Don't go after the highest rates. You might just lose your capital.
Perfect. Thanks so much for
the only risk.
Right.
So the only risk you're mentioning here is the platform that you're sticking on, right? Any other risks that the investors should be aware of?
So two things. I think number one is the collateral risk. That means how this world works is like smart contracts, right? You essentially put the money against a smart contract, and then it's stored there until certain conditions are met. Now, if that smart contract is not well written and it has loops, somebody can exploit that loop and take away your capital. Think of it like your bank account getting hacked. So that's one risk, the smart contract risk. And yeah, like a platform who maybe does not, has poor systems. Most of the exchanges right now are semi-centralized. So if those systems are weak, then maybe there are chances that money gets lost. But broadly, I would say those two are the risks. So just stick with larger platforms, and I think staking then is pretty useful. You're basically providing liquidity to a very vibrant financial market, and you're getting rewarded for that.
Okay. So I'll be honest. So right now, I think my Bitcoin is just kind of sitting in a wallet somewhere, right? And I'm not really doing anything with it, right? So what would you? And I think there's a lot of people who are similar in similar spaces, right? Like they're like, oh, I should buy some Bitcoin or Ethereum or what have you, and then they do so, and then it's just kind of sitting there. Do you have suggestions? So I think you mentioned Gemini. Like, does Gemini also take Bitcoin for staking purposes and all that?
Yeah, correct. So Gemini does staking. I think Crypto.com does staking. Most of the platforms, like Binance, does a ton of staking. So yeah, again, I think that there has one thing to just caveat is money on an exchange is less safe than money in a wallet. And of course, exchanges are getting better at protecting, but we've in the crypto world, we've seen the hacks around Mt. Gox and all of that. So I think factually, money on exchanges, maybe not factually, but based on past experience, money on exchanges are less safe than money in a hardware wallet. So you do run some risk that the exchange gets hacked. It's, to be honest, the same way saying that, your bank is going to get robbed tomorrow. It is the same risk. So an exchanges can get hacked. But other than that, your money can sort of do work for itself, and it's better to invest it rather than let it lie in your bank account. It's the same reason why you should not keep too much of cash in your bank account and sort of invest it, because it does its work. It sort of provides liquidity to people who need it, and keeps the financial system running. So the same way. I think given that it's pretty early in the world of crypto, and there are plenty of arbitrage opportunities, staking rewards are fairly, I would say, more attractive than what you would get with fixed deposits and things like that in the fiat world.
Yeah, for sure. And when someone does go through something like a staking, are they, with I guess your example here was using some sort of term deposit of some sort, right? And with term deposits, you are, you essentially don't have access to that money for a certain period of time, right? So is that also true with staking? If you go through a staking, you're saying, I agree to not have access to this money for the next period of time. And if that is true, how long are the periods typically like?
Yeah. So staking has multiple formats. There are staking which are called flexible stakings. And the best way to think about it is your liquid funds. You can put in money and get money out whenever you feel like. So those are options available. But then average, I think the most common stake I've seen is about 30 days. And the longest I've seen is about 60 to 90 days. I haven't seen stakes longer than that. I haven't seen anything which is 5 years. Put your money in, you can't touch it for 5 years. I haven't seen anything so far. But yeah, it's as flexible as, just totally flexible, put it in and take it out. But there are also, 30 days and 60 and 90 days. I haven't seen more than 90 days. One Ethereum 2.0 stake is interesting, and we won't get into that, but that's basically you stake Ethereum when Ethereum 2.2 launches, and nobody knows when. So that's the longest term stake I've heard, but that's completely different. But most common staking is up to 90 days, I would say.
Good stuff. Good stuff. So for those who are watching, if you have any other questions, please do leave a message or a comment on our Facebook page or the YouTube channel. Anything you put on the video itself, we will be able to see here, and we can actually pull up to show everyone and answer that question. All right, Andrew, do you have anything else on your end?
Well, I think we can hang out for a bit longer while waiting for the questions to come in. I think we can do a little bit of a wrap up for what we spoke about today. We talk a lot about crypto, and beyond the hype and the over-sensationalized media, there's actually some practical use cases for Bitcoin, for cryptocurrencies, and Reuben shared a few examples with us today. So, and actually I want to use Chong's example as well. He read up about it and he invested a small portion of his net worth into it. So don't invest more than what you can afford to lose, right? But you might want to get into the space, keep it a small percentage of a portfolio, understand what's going on. And once you are in the space, there are things that you can do like DeFi, liquidities, pool, and staking. And so these are the options that you have on your plate. So I guess but I have to say that this is not financial advice, because our lawyer told us to say that. And that you should do your own due diligence. Everything presented here is for educational and entertainment purposes only, right? So do your homework.
Yeah. And
okay.
I wonder who in this world is allowed with financial advice. Everybody I hear
financial
says
advisors. They'll say that
the financial
I'm not
advisors.
They are certified financial advisors are allowed to give advice. Yeah.
Okay.
Yeah.
I think the only advice, the only financial advice I have, only the advice I have sort of acted on has been caveated to non-financial advice, and that is what pretty recently.
Exactly.
So I don't know where the real financial advice is. But anyway, none of this is financial advice. This is purely entertainment.
Yeah. And I think it seems like we don't have any other questions. So I think we are done for tonight. Thanks so much, Reuben, for joining us today. I definitely personally learned a few great little tips here and there to act on. So now, time to do a bit more research on my own end to catch up with what's happened in the crypto world the last few months. And I guess since I'm enjoying this video that we have created, I'm just gonna let the video close us off. All right. Any last words from either of you?
Reuben, you go first.
No, nothing from me. Hope this wasn't like an overload of information, but yeah, thank you very much for having me, guys, and hopefully this has been helpful for somebody out there.
Yeah.
I think it's very useful. Thank you, Reuben. And actually, Reuben appeared in one of our podcast episodes before. So do check out our TFC podcast. You can go to thefinancialcoconut.com.
All right. Oh,
Play the video.
I did forget, Reuben. Any places if people want to learn more about your work that they should be checking out?
Oh yeah, you guys can just follow me on Twitter. I'm at Nerona Reuben, or I write sometimes on Medium, which is I think you can find me at Reuben Nerona on Medium.
Awesome, and it's all those is also in our show description, so do check that out. And with that, thanks a lot, guys. Take care and have a good night. See you tomorrow.
Thank you. Bye-bye.